Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. Target and Home Depot are two of the best retailers in the US. They're also two of the best known retail companies, but which stock is better for investors? That's what I want to dig into today, especially after they both announced earnings earlier this week. My name is Travis Hoyam. Thanks for watching Rive Investing. Please subscribe here on YouTube for all my content. And I want to start with a macro picture of what's going on at both of these companies, because Home Depot reported a decline in same-store sales, expecting between a 2 and 5% decline in sales in 2023. Target, on the other hand, is expecting sales to be about flat. Might be down a little bit, might be up a little bit, but their guidance midpoint is flat sales for the year. So what's going on with these two companies? We have to think about the macro picture and what their product line is and why people are going to these stores. Home Depot is serving not only people doing renovations at their home, but also professionals, professional contractors who are building houses, doing major renovations. The spending on those kind of activities is starting to come down. That's just a macro impact of rising interest rates, of potentially a slowing economy, and the lack of stimulus checks that really drove a lot of sales in 2020, 2021. So I think it's natural to see Home Depot starting to pull back. Target, on the other hand, had a lot of growth during the pandemic as people were shopping a little bit differently. It enjoyed tremendous growth in Drive Up, in its delivery service, and then in pickup as well. Kind of the same infrastructure for same-day shipping. And that continued with 5% growth in that small segment in the first quarter. Now, overall sales were only up just slightly, but it does seem like Target has found a niche and found a way to provide value to customers in the same-day service. I like to call this a grocery plus business because Target has groceries. That's a huge part of its sales now. Plus, it has a whole lot of other products that you might need. Ironically, these companies' products don't really cross all that much. But which one is the better buy for investors? The thing that I keep thinking about and going back to with these two retail companies is their long-term trends. Home Depot was one of the big beneficiaries of low interest rates over the last 15 years as people spent more money on updating their homes, bought bigger and more expensive homes. They could take out loans. They could take out loans on new home equity as the value of homes went up. And that money, in one way or another, is going to flow to Home Depot, whether it's people buying goods themselves or whether it's contractors doing it for them. I think that's really going to slow down now with mortgage rates over 6-7%. People aren't going to be taking money out of their homes because there's no money there to be taken out. That's just the reality of the situation that we're in today. I think that's going to put pressure on Home Depot's revenue. I'm not saying this company is not going to be very profitable or very valuable 5 to 10 years from now. Just that sales are not probably going to grow all that much. And we may be in a multi-year swoon as far as sales grow. The company grew 43% over the last 3 years. That's tremendous growth. And I just don't think that momentum is going to continue. Target, on the other hand, really seems to be in a much different position than it was just 5 years ago. If you remember back then, we were really wondering how were they going to compete with a company like Amazon, who seemed like they were moving to every segment of the market. Well, what Target found was that its real advantage is that it has physical locations that can offer services within a matter of hours. So the company has now leaned into things like Drive Up. This is something that I use on a weekly basis to do a lot of day-to-day grocery shopping or small items that we need for the kids or for the family. And those are services that a company like Amazon just can't compete with because I need those items now, not necessarily in 2 or 3 days. So I think that's ultimately the differentiator. And we have seen over time that Target has actually taken market share, has outgrown the market overall during the pandemic, and now seems to be holding that share. It's not giving it back the way that Home Depot is. So from a price to earnings standpoint, Target is slightly more expensive, trading about 20 times earnings. But I think long-term, that's going to be the better bet for investors because the long-term trends are really moving in Target's direction. I would worry that the long-term trends are going to be negative or stagnant for Home Depot for at least the next few years as some of the tailwinds that helped the company over the last 15 years kind of unwind themselves. So out of these two, Target is definitely my pick today. It's the stock that I own. And if shares pull back and aren't quite as expensive as they are right now, I would definitely be looking to add more. So what do you think about these two stocks? Let me know in the comments section below. Don't forget to follow Rive Investing. Thanks for watching, everybody. See you here next time.